This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
An OPEC Plus panel is likely to recommend keeping the oil producer group's current output policy unchanged when it meets this week, 5 OPEC Plus delegates told Reuters on Monday. Ministers from OPEC Plus countries, members of the OPEC and others including Russia, are due to hold a virtual meeting at 1100 GMT on February 1. The panel, called the Joint Ministerial Monitoring Committee, JMMC, can call for a full OPEC Plus meeting if warranted. 5 OPEC Plus sources told Reuters last week that the JMMC would discuss the economic outlook and the scale of Chinese demand, and was unlikely to suggest tweaks to current policy.
Oil prices settled lower on Friday, making their weekly finish flat to lower, as indications of strong Russian oil supply offset better than expected U.S. economic growth data, strong middle distillate refining margins and hopes of a rapid recovery in Chinese demand. Brent futures settled down 81 cents, or 0.9%, at $86.66 per barrel, up just 3 cents from last week's settlement. U.S. crude fell $1.33, or 1.6%, to settle at $79.68, 2% lower on the week. Oil loadings from Russia's Baltic ports are set to rise by 50% this month from December as sellers try to meet strong demand in Asia and benefit from rising global energy prices, traders said and Reuters calculations showed.
Moving on to the top news in the energy sector.
India plans to use an emergency law next month to force power plants that run on imported coal to maximize output, 2 government sources told Reuters on Monday, in preparation for expected record consumption this summer. Many Indian coal-fired plants, including those owned by Adani Power and Tata Power in India's western Gujarat state, have not operated at full capacity in the recent years because they have found it difficult to compete with power generated from cheap domestic coal. Federal Power Ministry officials will work with those involved in debt restructuring of financially stressed power plants to make them functional, the sources said.
Russia's war in Ukraine is expected to weigh on long-term energy demand and accelerate the world's shift to renewables and low-carbon power as countries boost domestic energy supplies, BP said in a report on Monday. In its benchmark 2023 energy outlook, BP plc said the Ukraine war will slow global economic activity by 2035 by around 3% compared with last year's forecast due to higher food and energy prices as well as reduced trade activity. BP lowered its oil and gas demand forecast in 2035 by 5% and 6%, respectively, under its central forecast scenario that is based on government's current energy transition plans. The changes are focused mostly in Europe and Asia, which rely heavily on energy imports, BP said. Next, we have the top news in metal markets. China's lithium production expanded strongly in 2022, an industry association said, buoyed by strong demand from the new energy sector and soaring prices. China produced 395,000 tons of lithium carbonate last year, up 32.5% year-on-year, according to China's Non-Ferrous Metals Industry Association. Its output of lithium hydroxide climbed 29.5% to 246,400 tons. Both lithium carbonate and lithium hydroxide are mainly used in battery making for electric vehicles, EVs.
Analysts have sharply upgraded copper forecasts for 2023 after top metals consumer China lifted strict COVID-19 controls, but they remain cautious about whether a New Year rally is fully justified, a Reuters poll showed. Copper prices soared to the highest levels in over 7 months in January as speculators piled into the market, upbeat about the prospects for the reopening of the world's second biggest economy. Most investors expect a rebound in demand for the metal widely used in power and construction, but they differ on how soon this will occur.
We will now look at the top news in the agricultural.
Malaysian palm oil futures on Monday closed at their highest in nearly 3 weeks on concerns over output, following flooding in the world's second largest producer. The benchmark palm oil contract for April delivery on the Bursa Malaysia Derivatives Exchange gained 28, or 0.72%, to 3,930 ringgit, $926.45 a ton. The contract rose for a third straight session to close at its highest since January 10. Farmers in Malaysia's southern state of Johor are worried that stagnant flood waters would affect their palm oil yields, after heavy rains last week displaced thousands of people in several palm oil producing states, according to state news agency Bernama. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.